Hello traders, Nick Shaheen here looking at ways to trade, things we can do to improve our trading. So first of all, we need to learn charts. I still am baffled at investors who still insist that the charts don't matter and they don't need to learn them. I don't know how you can, quote, trade without them because you're competing against, yes, you do have, it is a competition. Whenever you're buying something, whenever you're selling something, there's somebody else on the other end that is competing with you. Basically, you and them are disagreeing, and one person, you think they're idiots, and they think you're an idiot. So you can improve your chances by actually doing some homework with the charts. And it's not as hard as you think. It can get hard. You can complicate things, but there are some obvious things that are so easy to see. This is a case in point. This is a DIA today. Today is, what the heck is it? August 12th, and Wednesday. In the chat room, by the way, speaking of, down below in the description of this video, there is a link to the chat room. Try it out, it's free. And we do this all day, every day. We chat about anything and everything, and we have hundreds of people in there of all different styles. So the ideas are great. I moderate, but everybody contributes. And I posted a trade alert for the fast hands during the day, as far as somewhere around here, that there's a breakout in the DIA, and it was about $1.20 or $1.30 opportunity. This is a fast chart. This is a 1 minute chart, and I also saw this on the 5 minute. So it was there was plenty of time for people to grab calls, buy the DIA, and then get out of it. So the idea was that they came at prior fail zones of multiple times, and then they broke above it, and then they used it as support to make a run at it. So how do I know to book up here? Which, by the way, you do know to book up here. It's because if you study just a few minutes you've heard of head and shoulders and inverse head and shoulders, and you can guesstimate the size of the rally from the breakout by how bad the worst fail was to form the pattern. So the upside potential was, I don't know, eyeballing it somewhere around here. And this, technically it could have been more, but if you look left, there's reason to leave early. So anyway, point number one, you can identify the place to start the rally. Point number two, you can identify where you should book, and look what happened thereafter. And that doesn't mean it's going to go down. That's just revisiting the neckline. So it's probably going to do this. It has an opportunity to do that, but that's a different conversation. So you say, well, it's a one-off. I call bull on that. So let's do this. Let's go to a higher time frame. This is the DIA and daily. All right, perfect. So this is what most people look at, a one-day chart. All right, let's see if we can come up with similar patterns that could have told us, hey, go long, go short, exit, whatever. So, okay, I'm doing this on the fly, excuse me. How about 3 months ago, 4 months ago? This would have been the trigger to go long, if not here, here. Why? Because they had come at it, failed. You can argue they failed, came at it again and failed, and then they finally busted through. Whenever you break through a level, and then they retested it here. You can see a couple of candles as a solid floor, and this level had been a pivot zone from before. Like they fell here, they bounced, and they fell through like a whoosh. And now they have a good base because they beat a prior level of contention that failed and failed and failed, and they finally got above it. They're not going to let it go. They test it again, test it again. Now it's even better footing. Right, so that is the same type of breakout that we just saw on the day on the 1 minute chart. It's playing out on the 1 day chart. Okay, so this is one way of looking at it, and I'll clean this up so you can see it. You can see it. You can totally see it. Consolidation zone right here to give them the courage to reattack it and then finally get above it. So now they have a consolidation zone here. See that? So now this is a good base. So if they come down to here, this would be a reason to buy it, because you'll see CNBC saying, oh my gosh, it's just the end of the rally, and everybody will rush to buy puts somewhere around here, and that would be the mistake, because this was the base of this rally. When you and if it comes back to here, whoever bought it here say, hey, last time I bought it here I made money, or those who missed out, it's like, hey, I missed out on this whole rally, it's back to the start, I can do it again. So now maybe it does this, and then you get out here. That's a different conversation from volume profile, but then it might do that. So that's why it's important to know when to get out. What does this look like? A head and shoulders. So you don't want this. I'm not saying this is what's going to happen, but you don't want this. And if this happens, what happens after that? If they lose this, they come down and fail, then the target would be somewhere around this much. And then if it falls, guess what? I'll be out anywhere here. Why? Look left. This. I just said this was a good base. Consolidation. Spent some time. This would be a good place. So here's a scenario. Take a picture. This might actually happen. Okay? This might actually happen. Now there's this carrot up here that they want to deal with it this week. But we'll see what happens tomorrow, Thursday and Friday. My gut says that they give back some. Gaps this big need a reason to get through. So maybe Boeing will have some sort of a headline and it'll bust through. But my point is, from this short video, is do homework, study some patterns. You don't need 1,000 of them. I just told you one or two basic, and they repeat over and over and over. If you want to hint at something else, you've heard of ABC pushes or 3 pushes, ABC moves, whatever. The theory of it, the spirit of it, you don't have to be a scientist. You don't have to know Fibonacci level. Just freaking ball the thing. Eyeball it. So you see a big push, and then they spend some time consolidating, and then they see another push. Yeah, you just did an ABC move. I know some technicians go out there, that doesn't qualify because you didn't. Don't care. It works. Look at it everywhere. It's everywhere. So you see a big push, and then they spend a month. This is about a month fighting over this whole zone. Guess what? As soon as they peek over it, the bulls are going to do their thing again. Whoop. And they're almost exactly the same size. And then you follow patterns and levels, and you pay attention. You look left and see, hey, what happened last time we were here? Like any point in time, you look here. Hey, what happened last time we were here? Is this an important level? Hell yeah, it is. Look. And look. And this orange line itself, that's a different conversation. The volume profile. If you don't know volume profile, go study volume profile. Reach out, join the chat room. We'll get together. Volume profile is the second most important ingredient in my formula. The first is eyeball, levels. I don't need anything. I don't need any tools. I didn't put any of my lines on there. I used my eyeballs to put the lines on, and they're freaking spot on. Not because I'm a genius, because I'm just diligent with the charts. And with a little practice, you can find the levels. Nick signing out. Don't wing it, man.